Yeah, I think it's a couple of things. I think there's going to be a total change in AI and the AI trade. It's all about productivity gains. Stop talking to us about the technology and how we make the technology. Start telling us about how it's going to be used in our daily lives. And that's going to have an impact on the stocks that do well. So actually you could see the companies, the tech companies that produce the products with AI, I think we're going to see a lot more uptake in that. And that will be really positive for them, especially compared to maybe the chip makers like NVIDIA. We've started to see that already. So there's been a real shift and a rebalance within the Magnificent Seven of those 7 big tech companies. And we think we'll see that extended into 2026 with the likes potentially of Microsoft picking up. They've been a bit of a laggard within the Magnificent Seven. Also Oracle, now it's been hit very hard with its most recent results, but they also sell these products that are going to be in demand. So we think that there's going to be a bit of a shift out. So it's not going to be the chip makers that are going to do so well. It's going to be the companies with the products who are going to see the real stock market gains there.
And in terms of the tech rally, are you expecting us to see a continuation of the kind of gains we're seeing or we've seen this year? Or do you think investors will be a little bit more skeptical and will be demanding more to see the same kind of gains?
I think so. And I think the skepticism will come with valuations, right? Because these tech companies they're really, really expensive. That's why we've seen other sectors start to do well, particularly in the last couple of months. And actually we've seen US equities actually underperform, especially compared to some areas of Europe, just because valuations are so much cheaper there. And Europe has some fantastic companies as well. But I still see, be it in the US or in Europe, the likes of Salesforce in Europe doing really, really well. And I still think Microsoft will do very well because they've got the products. And that's what we're going to be focusing on in 2026.
It's interesting you mentioned Europe because there have been some reports recently about how actually European stocks are undervalued. And some investment banks have put out notes to that effect and essentially saying that they could actually present a buying opportunity. I mean, do you share that view?
Yeah, I do, absolutely. I mean, we've seen financials. The European banks have been tearing ahead this year. Obviously, defense stocks have done very well over the last couple of years. But if you look at luxury as lagged, we've also seen consumer stocks not do very well. They are powerful, important companies. And if investors are saying, well, you know what, we're already overweight the US, we need to balance somewhere else by looking elsewhere. Europe has a lot of strong companies going on. And as you mentioned, at an attractive valuation. But they're also very, very good at returning money to shareholders. So good at dividends. Share buybacks are getting much more popular in the UK and in Europe as well now. And we think that's going to be another driver for equity markets. It's not necessarily just about the stories and just about the hype, which is really what we've seen for most of this decade so far in terms of trading themes and where stocks have gone. It's really going to be about the fundamentals. So which company is attractively valued but is still generating enough profits to entice investors into them, and also which companies are returning the most to shareholders, because I think we're at that stage of the rally now. We've done very well for many years, but I think investors are looking for something back.
And when we look at the UK, there seems to be quite a few risk factors on the horizon, especially on the political front. And I just wondered, when you look at the FTSE, how do you rate its performance versus its peers? And what is the outlook for next year vis-a-vis other European markets? But also, what are the factors do you think that will have the most impact on the FTSE and listed companies here? Do you think it's central bank policy, other factors, or potentially even the political scene?
Yeah, I think if you look at the FTSE 100 and actually the FTSE 250, I think they're quite immune to what's been going on politically because they're so outward looking, they're so international. They generate more than 50% of their revenues from outside of the UK. So the political side of things, yes, it can have an impact, but smaller impact. A lot of these businesses are very, very global. So, even bond yields, where bond yields are going in the UK, aren't necessarily a driver of their returns. But I do think, obviously, when you look at the more domestically focused sectors, so the consumer discretionary stocks, your M&S, your Next, the grocers as well, of course they're going to be really impacted by what's been going on. But these are big companies, so they have a lot of power in their strength and in the size of the revenues that they can generate and the size of the market share that they've got in the UK. We're still a very important economy in Europe. Yes, we're going through some economic crises, but in terms of how the UK will perform relative to Europe, we've done very well. We've kept up very, very well so far this year, certainly with the Euro Stoxx 50, even the DAX to an extent. We've outperformed the CAC, for instance. But I think that, yes, the UK has its own challenges. However, I think the investment themes that are going to drive 2026, so looking for value, well, you can't get better value than the UK stocks at the moment because some of the valuations are really, really rock bottom for some solid companies. I think you're going to be looking for utility companies to really kind of get their management structures into a better place, to be able to generate the returns, to stop with the scandals. I'm talking about the water companies, etc. And once that happens, I think you're going to see a lot of interest in those companies as well. And I think our financial sector will continue to go from strength to strength, a bit like our defence stocks. You know, defence stocks in the UK, BAE Systems, Rolls-Royce, they've been performing as well as some of those chip makers that we talk about in the AI trade over in the US. We just don't have as many of them and our companies aren't worth as much. But I think it's certainly that the UK is definitely well placed within that pool of European stocks that we think global investors are going to look to kind of capitalise into in 2026.